Welcome to this explainer. Today, we're diving into a massive, industry-wide evolution that's happening right now in venture capital. We're basically tracking a complete rewiring of how institutional money shapes our future. We're moving along a spectrum, from the rapid liquidators of the past to a brand new era of architects focused on legitimacy and patient capital. Here's a quick roadmap for you today. We'll start with the VC paradigm shift. Then we'll map out this new spectrum, looking at A16Z and progressive decentralization, VC lab codifying ethics, and general catalyst push for patient capital. And finally, we'll wrap up with what this all means for the future of innovation. Let's kick things off with part one, the VC paradigm shift. So here's the big question. Is the era of the quick VC exit actually over? For years, the ultimate goal was the quick flip. Think about communities like Y Combinator acting as this rapid scaling disruption factory. The playbook was simple. You build an app, disrupt a market, and push incredibly hard for a fast IPO or an acquisition. But as tech starts eating into the really critical, heavily regulated parts of our society, that purely extractive short-term mindset, it's showing some serious cracks. And that tension is creating a totally new spectrum of investment philosophies. On one end, you have the traditional financial harvest approach. This is your classic liquidator model, where the entire goal is maximizing returns through those rapid exits. But on the other end, we're seeing the rise of stewardship strategies. These are models prioritizing pro-social and long-term organizational goals. Basically, capital isn't just looking for a fast exit anymore. It's searching for a sustainable home. Which leads us to part two, A16Z and progressive decentralization. Now, to really grasp this, look at the sheer scale we're talking about. Andreessen Horowitz, or A16Z, manages more than $74 billion. Historically, they've been a massive institutional liquidator. But right now, they're attempting this major pivot toward real-world use with a 10-year investment horizon. This absolutely proves that moving away from short-term extraction isn't just some fringe idea. It is a massive reallocation of institutional resources. They call their specific approach progressive decentralization. So instead of building a company just to sell it to a giant corporation later, A16Z uses a three-step playbook. Step one is central control. That's where founders keep a tight grip to find product-market fit. Step two is community expansion, where you start distributing political power back to the users. And step three is the protocol handover. You hit a state of sufficient decentralization, and you literally hand the keys over to the community. But why go through all that trouble? Well, our sources highlight three main drivers. First, it distributes economic value much more fairly to the actual creators. Second, a distributed network drastically improves technical security. But the third reason, and honestly, this is a massive operational reality, is regulatory survival. Reaching that sufficient decentralization actually helps projects navigate the SEC's Howey test, which can insulate them from traditional securities regulations. Moving further down the spectrum, we arrive at part three, VC lab and codifying ethics. There is this really striking quote from the Mensarius Oath, which was introduced by VC lab. It acts as an institutional blueprint for ethical behavior. Investors literally pledge that if they violate the oath's core values, they will voluntarily leave finance for the rest of their career. And what's fascinating is that this isn't government-enforced. It's a soft governance mechanism that relies entirely on peer review and real, actual career accountability. And you can actually see how this framework has evolved over the years. Back in 2020, version 1 focused on basic operational baselines, things like just acting honestly and applying rigorous analysis. But jump to the modern version 2, finalized in 2024, and those baselines are codified into a much sharper focus on human-centric development. So integrity went from just acting honestly to consciously avoiding harm. Fairness shifted from just treating people well to actively standing against the abuse of power. It's a major step up. And the data shows this isn't just theory. We're talking about over 5,000 global signatories across 100 countries. Remarkably, our sources note that there have been fewer than 10 recorded violations. Accelerators like VC Lab are systematically taking this codified ethical blueprint and injecting it directly into the next generation of fund managers. All right, part 4, General Catalyst and Patient Capital. This brings us to General Catalyst, and they're really acting as the ultimate benchmark for Legitimacy VC. They operate under this core thesis called global resilience. We are absolutely not talking about consumer photo sharing apps here. This is about securing vital societal infrastructures, think defense, manufacturing, and the energy transition, and protecting them against geopolitical competition and fragile global supply chains. To pull that off, your timeline has to completely change. General Catalyst explicitly contrasts the old exit mindset with what they call the endurance mindset. I mean, rebuilding healthcare or defense infrastructure takes a very long time, so they are intentionally designing financial structures to hold companies well past their IPOs, making sure they align purpose and profit for decades, not just a few years. How do they actually execute this? Through a really clever operational playbook called AI-enabled rollups. They'll back founders building specialized AI, but instead of just selling it as software, they acquire legacy service businesses and inject the AI directly into the operations. It totally shatters the old SaaS-era trade-offs. They're targeting massive 30 to 40% profit margins alongside 10 to 20% growth. They're basically establishing a brand new rule of 60 standard for Legitimacy VC. Finally, part 5, the future of innovation. Our sources lay out the gravity of this shift in incredibly stark terms. General Catalyst frames the geopolitical reality like this. The country that wins the war sets moral and ethical standards. Over the past 50 years, American hegemony ushered in democracy. What happens if authoritarian states win the next war? We are presenting this impartially just to highlight the immense, real-world weight currently resting on modern venture capital. We're literally talking about funding the defense systems and ethical paradigms that will dictate global power dynamics. The traditional model, that quick, unaccountable exit, is giving way to a totally new spectrum of stewardship and endurance. Capital is demanding resilience, and investors are finally holding themselves to a higher ethical standard. So I'll leave you with this one thought to chew on. When the architects of our future are finally held accountable for the world they're funding, what will they build next? Thanks so much for joining me on this explainer.